Welcome to Alpha Recap, your after-hours rundown of the biggest market moves. We close the day with a lot to unpack, and as always, if you have questions, you can reach us at stockalpha.ai.
Hey everyone, great to be back. Markets closed up and down in different pockets today, and we saw some really concentrated re-ratings that forced investors to rethink positions fast.
So, what really stands out here is the trifecta of company news that dominated the tape. Eli Lilly, Intel, and Caterpillar.
Right. Eli Lilly beat and then raised guidance by $2 billion, reporting that GLP-1 sales nearly doubled year over year. That changed the story from a single beat to a visible growth re-rating.
Exactly. When a company both beats and actually lifts the full-year outlook, that's a different animal. Analysts and traders pushed the stock sharply higher because the consensus growth baseline moved.
Intel was the other headline. Honestly, I was a bit surprised by this one. The company posted a blowout quarter, and the stock had a massive month, up about 214% for April. That was a historic move.
A 214% monthly gain forces people to rework valuation math. If that performance is sustainable, it changes the competitive map. But if it was a one-quarter rebound, then momentum could fade.
And then Caterpillar reported construction industry sales jumping 38%. That was a clean, macro-sensitive data point that argued for stronger activity in infrastructure and heavy equipment demand.
Those three stories together created a very mixed market profile. Pockets of strong re-rating mixed with caution elsewhere.
Right, and cross-currents mattered too. The European Central Bank held its deposit rate at 2% today, and Gemini won U.S. approval to expand derivatives offerings. Meanwhile, there were fresh questions about Nvidia's competitive moat, even as AI spending stayed robust.
Let's break down the key themes. First, earnings are now about guidance and secular signals, not just headline beats.
Exactly. Microsoft beat on both top and bottom line. $4.27 adjusted earnings per share on about $83 billion in revenue. And yet, shares slid afterward. That shows the market is parsing forward visibility and structural momentum, not just the quarter itself.
SanDisk was another example. The company delivered an eye-popping surprise, but the stock only had modest follow-through. Market participants seem to have already priced in a lot of the upside for some names.
By contrast, Eli Lilly paired a beat with a $2 billion guidance lift and a narrative, GLP-1 sales nearly doubling, that materially changed estimates. That combination produced a much clearer re-rating trigger.
Second theme, sector divergence. Cyclicals, semiconductors, and pharma were all on different signals today.
Cyclicals. Caterpillar's 38% construction sales jump is a very tangible demand signal. For semiconductors, Intel's surge rekindled a recovery narrative for a former laggard, while Nvidia had new competition concerns that raised questions about pricing power.
And in pharma, Eli Lilly's GLP-1 momentum concentrated growth leadership, while Merck beat on Keytruda yet narrowed its sales outlook for 2026, which is a mixed signal, margin strength but top-line visibility issues.
Third big idea. Volatility was headline-driven. We had intraday winners jumping as much as about 42%, and the leaderboard included Eli Lilly, Altria, Meta, and Qualcomm. That pattern favors event-driven traders, but makes life harder for passive holders who aren't tuned in to guidance risk.
Short-term spikes like that can be exciting, but they also create whipsaw risk for longer-term portfolios.
And there were real disagreements among analysts about interpretation, which is our next point.
On Nvidia, some argued the new competition represented a meaningful pressure on margins and multiples. Others said AI demand is so large it can absorb increased competition. Analysts note that the market's turn to caution suggests investor focus is shifting from demand scarcity to competitive intensity.
On Intel, bulls pointed to the magnitude of the rebound and operational execution as proof the company could regain competitiveness. Skeptics warned that a single strong quarter can overshoot fundamentals if it isn't followed by consistent improvements in process and margins.
And with Merck, the beat plus narrowed sales outlook produced conflicting reads. Some saw it as improving earnings quality through better margins. Others worried it masked weakening demand in key regions.
Let's dig a little deeper on the big names. Eli Lilly. The core story was product-led re-rating driven by GLP-1 therapeutics like Zepbound and Mounjaro. Rapid uptake pulled consensus revenue curves higher, but analysts also warned about regulatory scrutiny and pricing debates that could affect sustainability.
Intel's result was more structural. A 214% April gain compelled investors to revisit long-term competitiveness. If better execution translates into narrower gaps with foundry leaders, multiples could expand. But, and this is important, people need to separate genuine process improvements from short-term optimism.
Caterpillar was straightforward. A 38% increase in construction sales is a clean demand data point tied to infrastructure and commercial activity. That supports a reweight to cyclicals for folks who believe in a sustained CapEx cycle. But it also depends on macro policy and commodity cycles.
On the macro and regulatory side, the ECB holding its deposit facility rate at 2% keeps policy restrictive in Europe. That has implications for term yields and rate-sensitive sectors.
We also saw Volkswagen report a first-quarter profit decline of about 14% and warn that cost cuts alone wouldn't be enough. That was a reminder of the pressure on capital-intensive industrials in a restrictive rate environment.
And in crypto, Gemini getting approval to expand derivatives offerings is notable. Derivatives can create steadier fee income for exchanges compared with spot trading, which may reduce revenue cyclicality over time.
So who was affected and how? Active traders and event-driven funds had a favorable setup. Headline-driven moves create momentum, and dispersion trades if your execution is tight. Growth investors saw product concentration in names like Eli Lilly, but also more regulatory and pricing risk to weigh.
Value and cyclicals allocators got fresh signals from Caterpillar and Intel, suggesting there were areas where earnings upgrades might have been underappreciated. Long-term, diversified investors were reminded to focus on guidance revisions and durable cash flow shifts, not just one-quarter beats.
Let's be clear. This is informational analysis. We're not giving advice to buy or sell. Analysts note the data suggests a market where clarity on future growth mattered far more than headline beats.
A few quick strategic considerations and things to watch. Prioritize guidance and cadence over single-quarter beats. Monitor AI semiconductor competition closely. Track revenue composition and multi-year contracts for predictability. And keep an eye on central bank communications and yield curves.
Also follow derivatives rollouts in crypto. Gemini's approval could be an early sign of fee stabilization across exchanges, which has implications for fintech names.
Short reactions.
Big day for headline moves.
Yeah, absolutely.
Not what everyone expected.
Before we wrap, 3 clear takeaways. 1. Companies that raised guidance like Eli Lilly materially changed valuation inputs. 2. Semiconductors are in a debate between execution wins and competitive intensity. Intel's rebound and Nvidia's scrutiny summed that up. 3. Headline volatility created trading opportunities, but also valuation pitfalls for longer-term holders.
And remember, the market closed on these moves. We're talking about what happened today, not making predictions about tomorrow. Analysts note that sustained performance will require follow-through beyond these headlines.
If you want the quick checklist, watch guidance changes, watch AI competitive dynamics, and watch central bank messaging. Those were the real drivers today.
Okay, final notes. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening to Alpha Recap. We'll be back after the next market close with more breakdowns and context. Take care.
Bye, everyone. Stay curious, and don't forget to send your questions to stockalpha.ai.